Hey there, speculators. It's Rod, Futures on Fire, and TDG, the Traders Dev Group, software and strategies for the active trader. Hey, just a quick recap tonight of a signal that we took in the live trade room and also called out with plenty of advance notice. And most importantly, it's being plotted right there by the RS Trader software on TradingView. And that was a series of shorts actually, but we took the second one, actually took both of these, in the MES, which is the micro S&P futures contract, $5 per point. Very approachable futures trade 23 hours a day, have no pattern day trader requirement. So what's going on here? Also, if we want to look left, this signal, no pain trade winner. Down here, no paid trade winner. And then these last three, depending on how you're going to manage them, they did move down, but as you can see, the market continued to move up, and then finally, here at around the 29.10 level today is when the extreme turn fired off a signal that then rolled right over to target. That's what I want to talk about briefly. Get a lot of questions about how to manage risk or entry and things like that, and the answer is it depends, and there's many ways to do it. We start with the signal, and then we can express that signal in a variety of different ways. But I wanted to give a little bit of guidance today and in this video on one way that you can take these trades, even if you like to use fixed sizing. So if your entry is fixed, I will tend to scale in or campaign around levels. I teach and train and talk about ways to do that depending on a number of different factors. But if you want to just use fixed sizing, like you buy one contract, buy or sell one contract, buy or sell one share, buy or sell one lot in Forex, whatever the case may be. The way we're going to do it here and the way we expressed it today was actually using a dynamic stop and target using a fixed sizing. So the entry was 2 contracts, and the way we approached managing that was using a 7-day ATR stop and a 7-day target. Now I won't go and pull up the 7-day ATR on this chart because this is a 30-minute chart, so the ATR average to range for every 30-minute bar, of course, is going to be a lot less than what it's going to be for the 7-day. The 7-day right now is around 94, but I'm going to run that up to 100. That means 100 points of daily range is going on average over the last 7 days in the in this particular market, this particular instrument, if you will. So what we did is we took a 20% ATR stop, which just let's round it up to 100, so that's a 20-point stop with a 50-point target. That's 50% of that 7-day ATR. And I wrote boom because as soon as we put on this trade right here, took a little bit of heat here, but it's unusual to fire off back to back within about 4 or 5 candles. This one was earlier in the morning, and then this one fired off right as we were in the trade room. Now, if I just come over here to the handy dandy measuring tool right here, what I'm going to do is just go to a price range and mark it from somewhere in the middle as if you had averaged in. Again, we took one contract here, one contract here. I'll just put it, I don't know, we'll say 20.06. My average fill was 28.08 half. We're going to come down here and you can see maximum favorable excursion right into some support right there. So that's 51 points. That meets our 50% ATR target. 7-day ATR again is 100 points. That's 206 ticks. Okay, and to give you an idea of what that is on a single contract, it would be $250. Since it was 2 contracts, it's $10 per point. When you have 2 contracts, and this is 2 micro contracts, which right now at a lot of futures brokers, even with larger margins, you can trade 2 micros with about $500. I'm not saying that that's a proper capitalization for trading this particular instrument, but it is possible. There's even times where you could trade 2 contracts in the past in normal times with as little as $100. So $100 of margin turns into a $500 gain. These are not normal times, but let's say potentially $500 in margin to make this $500. More importantly, we were risking $200 to make the 500. Of course, that's if it went to our total 20-point ATR initial stop loss or catastrophic stop loss. Anyway, a little bit about what went on today using the extreme turn, which is part of the RS Trader series. If you'd like to find out more about how we do trade futures and options for daily income and use these strategies that are plotted right on your chart on TradingView as well as NinjaTrader, we're running a special right now given the circumstance where you can come in and watch us trade for 10 full days or 14 calendar days, because we do trade some weekend sessions occasionally or some evening sessions. And that's 10 days for $10. You can find out more about it in the link in the description below. All right, we'll leave it there for now. My name is Rod. I'm the lead futures trader at TDG, the Traders Dev Group, part of Futures on Fire. I'd like to remind you to stay green, trade like you mean it. Thanks.